people who don't understand the financial structures and the finance side of things, if they try to build a 9-bedroom, 9-bathroom without attending to some of the intricacies and, some of the risks in building these and getting them approved, etc., you can expose yourself to significant amount of, risks where you have a land that you cannot build anything on, for example, because you haven't done the due diligence. Hello and welcome to another episode of Helpmebuy Property Podcast. I have my co-host here today with me, Cheryl Leong. Hello, Cheryl. How are you today?
I am always awesome, Moss, especially when we're talking cool property strategies. And that's what we...
I know, right? I know. It's a very, very interesting topic today. And we thought that we would talk about it as almost 6 episodes. And so stay tuned till the very end and do come back to watch pretty much each and every episode. The topic that we're discussing today is basically 6 strategies to make 6 figures. And each strategy is an episode of its own. I'll try to summarize this and then we will pick one of those strategies today to discuss in a lot more detail. Now, understanding that all of these strategies are not get-rich-quick schemes, right? The numbers need to work on paper before you implement any of these strategies in real. So you have to be super, super conservative and you talk about the feasibilities, the due diligence, the conservatism, the contingencies, etc., all of that. Let's talk about the 6 strategies that we are going to talk about. And the first one, of course, off the cap of the ranks that wins by the mile is basically developments. And developments could be various different types. You can talk about small scale developments or full scale developments. When you talk about small scale developments, you're talking about hammerheads, you're talking about, small subdivisions, you can talk about land subdivisions. So there's heaps of stuff that we can definitely cover that. Then you have the second strategy, which is renovations. And so, you can definitely generate 6 figures in renovations. And we'll talk about various different types of renovations, residential renovations, dual income renovations, and commercial renovations. Again, come back and watch that episode when we are actually going to talk about that. The third cap of the rank that we are going to discuss today is basically rooming houses or co-living spaces, or people call it HMOs, which is housing multiple occupants. And so let's stop there and let's open the can of worms when it comes to co-living space. I know, Cheryl, this is one of your most favorite topics.
This is one
Talk to me about what is it?
One of my favorites for so many reasons. So I know that we've always been looking at high yield. We personally been looking at high yield and multiple income streams. And not only ones that give multiple income streams, which helps you diversify your risk. However, also to be able to go, okay, there is a real need in the market at the moment for affordable rentals. And affordable rentals that doesn't involve people sharing toilets and sharing sort of those essential amenities. Nobody wants to share toilets. Cook together in the kitchen. So when I came across co-living, absolutely loved it at the time that it was very much taboo, because people, in New South Wales in particular, they're still considered boarding houses. They're called boarding houses. And when people think boarding houses, there's a real stigma attached to it.
Yes.
Rooming house sounds a little bit better than boarding houses. People thinking boarding houses are druggies, bikies, just all the derelicts and everything else.
Yes.
Maybe in the old days, maybe that might have been the case, the old maybe social housing type models or whichever that might be. But I said it's a misconception more than anything else, because when you look at the new age, what they call new generation boarding houses, and in Victoria, they're referred to as rooming houses. In Adelaide, in Western Australia, they're HMOs. So different sort of terms, they're all a little bit different. But what we're seeing here is that potentially you've got incomes from 5 to 9 incomes in one property.
Yeah.
Which is also premium income, which can be from $250 to $350 on average.
Yes.
So if you do the maths there, say on average it's 300 for a room, which is often fully furnished. So you've got someone who, is a young professional. They don't want to have all the furniture. They don't want to be lugging around, getting a van and buying stuff off country. Like this property, I just moved straight into. It's got a bed. It's got everything else that I need.
Yeah.
So it's so convenient from that aspect. But then you go back to the rents again. You've got 300 and say you have, say, average 6 bedrooms. What's the numbers there? 3 times 6.
Well, you're looking at almost 1,800, isn't it?
1,800
a week in rent. Yeah.
A week. Whereas a house in that same suburb probably be doing a third of that or half of that.
Yes.
If you're lucky.
Yeah.
But the risk there with the house is that once that tenant moves out, that's all your income. And unless there's someone that moves in straight away. Whereas
definitely
6 tenants in one property, and if one moves out, you've got 5. If 2 moves out, you've got 4. And so and because there's so many, they know there's a diversification, it's really, really attractive. So I know I'm getting all excited about it, but it is one of those reasons. So what do you like about rooming houses? And
talk to me a bit about. And so when I first heard about rooming houses, and one of the taboo things about rooming houses that you mentioned also, how do you differentiate these from motels? You can buy motels at that sort of price point. You've talked about boarding houses. How do you see the differentiation coming through? Of course, one of the stereotypes that is out there for rooming houses is that how are you going to sell these, or what are you going to do with these, and who is going to manage these? And we'll cover all of those things and how do you actually make money. But let's start off with talking about, well, how do you differentiate these from temporary motels, where you would have, or block of apartments or block of units?
Yeah. So say for a motel, and this is my understanding, and I'd love to hear your source, where you've got a motel where it is really short-term rental in that sort of Airbnb style. You've got someone that might stay a day or 2 days, maximum a week, whatever that might be. People are not living there for a long time. Whereas so they've got really large transactions. In saying that, motels can they're still really good yielding, but then you've got a lot more management that goes into that.
Definitely.
Whereas I look at rooming houses, and the way that they're set up now, it is for longer term rentals. So and I say longer term rentals, you've got 6 to 12 months, like average 6 to 12 months. That's someone living there. And so then you've got less transaction costs. And the more attractive you make a rooming house, obviously people are going to want to be staying there for longer as well.
It definitely makes sense. I think if you talk about motels or short stay rentals, they, you get that image of, a tiny highway, next to a highway, tiny sort of motel, ugly looking motel where you would pay like $70 a night and just do a one-nighter with terrible beds. Rooming houses is a lot more boutique, a lot more posh sort of attractive product where you are trying to attract quality tenants as well. You're not attracting, naturally, you would attract students as well, but, you want to attract professionals, you want to attract people who are earning good income, single parents, typically. And so there are various different ideas, as to what the location of these rooming houses can naturally be.
Yeah.
So yes. And so again, we are talking only about Victorian rooming houses, right? And so, 4-bedroom to 9-bedroom, right? That's what the headspace is. You can put as many people as you want, or as many rooms as you want, I think up to 12 with 9 bedrooms, and you can create sharing, non-sharing, individual bathroom, not individual bathroom. What is the biggest problem in the rooming house space when you're going into the 9-bedroom, 9-bathroom sort of space? Talk to us a bit about that as to why don't people just naturally go for it if it's so good, right?
People look at it, it's the people management. It's not property management when you come to rooming, it's people management. It's talking about up to 12 people who are unrelated.
Yes.
And so they're different personalities. There's going to be some level of potential friction in the residents that are in there. So finding the right people that are going to be part of that little community that you're creating, the right co-living essentially the work community is really an important part. So having a property or room manager that really understands this space and really understands how to manage people is incredibly important. So I've seen situations where someone has set up rooming houses but have failed because they literally did not spend the amount of time to really understand that dynamics and how to make that work.
Yes.
So
yes.
That's the one bit where people also go, oh, if that doesn't work out, then how do I sell this? Who's going to buy? Who's going to buy this?
Definitely. And when you're talking about roaming houses, of course, there is two thinking around this. There is custom built brand new roaming houses where you get the tax benefits, where you get the all of the bells and the whistles. And then you're talking about established homes, which are big houses, 4-bedroom, 2-bathroom, 5-bedroom, 6-bedroom, 2-bathroom houses, where people are actually converting them into 7 or 8-bedroom rooming houses with 2 shared, say for example toilets to push the yield up. And naturally, what you are saying is that the overall fixed cost still remains the same. Yes, you have to pay for the bills. Yes, you have to catch all of those insurances and water bills, etc. But that uptick of getting so much rental in place still leaves you with a healthy amount of cash flow back into your pocket. The other important question is, who finances them? I know that there was a big question previously, right? As to, okay, how do you work these finances out?
Oh, you and I know that it has been an absolute sort of wild goose chase to find the right financial solution for this. Because for a long time, the major banks did not want to really, they didn't know how to deal with this type of product. Because they're like,
yes,
well, it's like a house, but there's 6 or 9 bedrooms. And because the 6 or 9 bedrooms, I actually think it's going to be less attractive for someone to buy, which is really quite odd because these properties, they would gross over 100,000 a year. That's 6 figures we're talking about. You're talking about having 6 strategies for 6 figures. However, the banks will look at it and go, I'm really not sure what this is. It's high risk. It's I'm going to make sure the LVRs are really unattractive. So, you'd have to have 60% LVR, 70% LVR, almost treating it like a commercial property to a certain extent.
Yes.
But not valuing it as you would have. But
yeah.
We're seeing now as this becomes a little bit more mainstream, or the lenders are seeing that the model works. The lenders are seeing that there is a demand for it. We are starting to see lenders who are going, hey, actually, this is a really cool product which creates really strong income. There's a demand for it. Why don't we combine the benefits of a cap rate, like a commercial rate, and value it to a pseudo commercial rate as well? So there it lies. We talked about not just the cash flow aspect of it, but if you're building one of these brand new and purpose built, then there's this extra bonus of an equity uplift as well, which we're not seeing in a lot of house and land builds, right? The traditional house, like when it's traditional, like how you're doing house and land at the moment, we're struggling to get the valuations because build is so expensive. However, with rooming and being able to throw in that other level of cap rate, we're starting to see that, aren't you?
Yes. And if I can explain that through an example so the listeners can understand it a bit better, a 9-bedroom, 9-bathroom, so I'm building 3 of them at this stage, 1 for myself, 2 for the clients, potentially going to build 10 of these, at least this side of June. And so if you think about the numbers, we acquired, or I'll talk about myself one. I bought the land for about 250, which is a 700 square meter block in an RGZ zone. Of course, it's not metro, but it's very close to metro. It's still non-metro. I'm building a 9-bedroom custom design house on this 9-bedroom, 9-bathroom, expecting a rent of around 300. So grossing it at about $140,000 a year. Even if you take worst case scenario, say 90% occupancy, not 100% occupancy, you're still looking at $125,000 to $120,000 gross. You take the income out, so all the expenses paid, you're looking at $90,000 net. You take the mortgage out, you're almost looking at about, in today's terms, say 6%. Even if I assume 6% interest rate, we are talking at about $50,000 net return every year. Now, this is where the interesting bit is, where you're talking about these are residential products in today's time, and so they're giving residential interest rates on these, but are being valued at commercial valuation. So a product like this costed me around $950 to build, including the land price. Valued because they are valued based on commercial valuation. So you have to show them what the value of the leases are. You have to show them what these are rented at, usually in some of these areas. And so the commercial valuation of the property was actually $1 million, not $950. So it was slightly higher, which is good, but it's not significantly higher, because what they do is they take a much more conservative approach. And so while they are giving us a cap rate of, I think, around 6.75% or 6.5%, the rent that they're assuming is only around $240 or $250 per week. Okay, whereas these are actually rented at $300 or $290 or $280, $285 to $290 per week, sometimes even $300 per week. And so at completion, once you put the full tenancy in place and you have all the rooms tenanted and you go back to do the valuation, because the cap rate doesn't change, the valuation automatically jumps. And so 8 months down the track, you've done the build, you've put the tenants in there, because these are single story, very quick and easy and dirty to build. You can almost push the valuation from $1 million to almost 1.3, 1.4 million in this particular product I'm talking about, right? For places where the cap rates are different, you can get significantly higher valuations as well. So from my perspective, I'm saying, okay, $1 million, the bank wanted me to put 20%, so I put $200,000 in, 1.3 million, I get my money back plus something on the top. I can do one every year and generate $50,000. And so I'm technically making almost like $80,000 just by doing one, plus an extra rental of $50K. I do 2 every year, or 1 every 2 years, say, for example. 2 of these is 100,000. 4 of these is, people are ready to retire, right? More from a cash flow perspective. So naturally, that's the attraction that comes in place.
This is with lending, right? So if if you decide that you've got a whole lot of cash that you go, I don't want to leverage any lending and put all your funds in here, then there's over $100,000 of income there, or net.
Definitely.
90. So I guess the question that people might ask is going, well, Moss, you bought the land for $250 or whichever. How much is your neighbor worth?
How much is my neighbor worth? Yeah, that's a very good question. So the neighbor who has a 4-bedroom, 2-bathroom house is worth somewhere around $740. So $730, $740, because he has built a brand new house, right? And so it's not fairly different, right? I have a 9-bedroom, of course, a significantly bigger house. I'm sitting at almost 300 squares, versus the neighbor might slightly be lower, but he has all the bells and whistles. So yeah, for an extra 200,000 on top, I would say 750 to 950, right? I'm making 4 times the money that he would make on the rental, probably more, like, 4 times his, way. He can rent his house, the whole house, for, $420 or $450 per week. I'm making 300 multiplied by 9, that's $2,700 a week, so it's ridiculously more than what he would be making, right? And if you compare these to even commercial properties, right, they beat the commercial properties by a mile, because the net yields on the commercial properties in a good day sits at around 5.5 to 6%. They boast 7% yield, versus the interest rates are significantly higher in the commercial space. When you talk about residential rates, these are significantly lower. The beauty of this is this, right? And this is where I was convinced that you don't have to build 9x9. You can do 6x6, 4x4, 4x3, 3x3, 5x5. There is so much opportunity. And the dawning moment for me was that people who are trying to buy in Melbourne, for example, okay, and they're like, okay, I want to buy in Melbourne because Melbourne offers mature growth. You would rather buy 4x3, for example, rooming house, or 6x6 rooming house, for example, that you can convert into a normal house in the future and still sell it or move into it, right? And so it's best of the both worlds, rather than just buying a typical product, 4-bedroom, 2-bathroom, and seek a rent of 420, significantly negatively geared, where Melbourne does not offer you higher yields at all anyway.
Yeah.
So I think that's where the biggest point of difference is, especially in the Melbourne space.
Yeah, that's a really good point. So I mean, we've got six-bedroom rooming houses, and that can be easily converted back to a 4-bedroom plus study plus rumpus type scenario. So
correct.
When you look at that, you want to be able to consider what the exits are in future. However, all going well, if you're earning a whole stack of income from it, it's very unlikely you're going to sell. And this is where the valuations, we talk about valuations because it was really quite hard for quite a while to find valuers that understood that product. Because so many people were holding on to these investments without selling them because they're making such good incomes.
Definitely. And you don't see any comparable sales when you talk about rooming houses. I think there was one sold in Frankston in Victoria in 2022 for like $1.8 million, right? And it was a 9-bedroom, 3-bathroom, or 4-bathroom or something like that. And so, of course, from a commercial perspective, people would naturally find it very attractive. The cash on cash return, like if you're generating $50,000 a year net after repayment and you only need $200,000, your payback period is literally 4 years, right?
Yeah.
Even just from a rental perspective, technically your payback period is 1 year because you can pull that money out pretty much right away at the valuation.
Yes.
But even if you think from a rental perspective, your payback period is like 4 years. In 4 years' time, the rental would basically pay yourself out. And now this property is bank funded, right? Bank is funding everything. You've got your money back pretty much right away. So there is a lot of positives to some of these things. And so, naturally from a retirement perspective, it is a really good product. When I'm talking to the clients, I also say that if you're looking at tax benefits and positive cash flow and premium growth at the same time in a single package, then this is the product for you, right? Especially in Melbourne, right? You're buying it in a high demand growth suburb. You're not over capitalizing significantly. You're pushing the yields really, really high. You can hold it for as long as you want and not break the bank, still keep it negatively geared or still keep it neutrally geared, add the tax depreciation on top, and all of a sudden, you're benefiting out of taxes as well. And so people who follow like 20-year strategy, buy one property, never sell, this product is perfect for them.
Yeah, I love playing devil's advocate here, Ross. So the questions we often get is it filled with students? Is it filled with overseas students because they're pretty transient as well?
Yes. And look, ultimately it depends on where are you going to build these, right? The natural sort of attraction where people build these are closer to train station, closer to hospitals, closer to universities, to get the higher occupancy rate in there. So of course you would attract, the students, you would attract single parents, you would attract, you would not attract doctors or nurses. Anyone who says that is, bluntly lying to you. I've never seen a nurse living in a rooming house or a bloody doctor who is earning $250,000 or $300,000 a year living in a rooming house, right? And so anyone who pitches it that way is definitely taking a mickey out of you. But I think the biggest market to cater for when you're talking about affordable living is this age bracket of people from 18 to, I would say, 23, right? And so these are people who are just moving out of their houses. They're doing casual jobs. They're moving into professional space. They don't want a big debt on them. They don't want a big liability on them. They don't want to go and get into big leases. And so 2 of these friends or 3 of these friends would basically come in and live into the rooming house, each holding a separate lease on everyone's name. And so they don't want to share any liabilities together. I've seen girlfriends, owning taking a bigger space in a rooming house, and girlfriends and boyfriends basically, coming in and doing that as well. So
Yes.
I think that's your demographics. That's your key demographics. Yes, you would see wear and tear. And so you have to be very, very careful, as you said at the start, that a rooming house operator who's very, astute, very savvy in selecting the right tenants, making sure that, there are good rules in place, they're managed properly, it does not become a party house. It does not become, one of those houses where you're having, rogue parties every night.
Friday night, every weekend. Yeah.
Yes, you don't want rave parties having in your rooming houses, and next thing you know, the council is at your doorstep and the neighbors are complaining, because naturally these are in normal suburbs. You can't tell that a house is a rooming house looking at it from outside.
Yeah. And the other area where people get quite concerned about is whether, you're cramming people into a house where they're really unhappy, that we're sort of, taking advantage of those who can't rent anywhere else, Give us an idea of what these properties are like.
Look, I mean, they are not tiny homes, right? And so you're talking about almost 300 square meter of build area. If I talk about, square meter for people who understand in square meter terms, you're talking about almost 32 square meter house, right? 32 square meter house of bedrooms, en suites, robes, storage, their own small kitchenette, their own personal space. In majority of these, you would have your own side table, your own, study, your own space within the bedroom to, add a bit of sofa set, etc. So, these are quite spacious. You're talking about an average bed size of, at least, 15 to 16 squares, the bedroom size, so they're not small. They are square meters, sorry, not squares. And so they're not small. They're still decent size houses. Plus you get, shared kitchen, like full size kitchen. You get, shared laundry. So you get all of those facilities in the house provided for you. People do go, like the investors do go a bit extra mile to attract quality tenants. And so they would add courtyards, for people. They would do soundproofing, to provide better privacy. They would have, ducted heating and cooling, in their full house. They would have key operated doors or, passcodes on the doors, etc. They would provide an ample amount of storage at the front and the back through sheds. And so they really look after the tenants. It's not so much about, we are just going to maximize the returns. The idea is to put quality furniture in. The idea is to put, nice interior design in. They need to look pleasant, So yeah. It's not, one of those rundown houses that you would think of a motel with terrible beds. You want nice mattress. You want people to actually enjoy and live there. And so while these are classified as that short-term rentals, an average rental in a rooming house is still around 2.5 years. So yeah.
And so it's like I said, we're changing the perception of what these rooming houses are like. And the good operators and the good investors are the ones that are going to make it so that they're attractive.
Definitely.
It becomes a really easy option for whether it's a young person. We actually see a lot of single parents that want to live in a suburban area close to their families that rent a lot of these rooming houses as well. And in saying that, for an investor, where there's opportunity, it's not only for young people. You might decide that you want to cater to a particular market where it could be women over 50, but there's a big market there. A lot of women over 50 find it really hard to find affordable rentals and things like that. So it caters to a lot of different areas in the market, and it's addressing a pain point. a pain.
Definitely. And look, I mean, there are operators out there, who would make this all about not just solving the problem, but it's a money grab, right? Like any other product out there from an investment perspective, right? And so while this product is almost, I would say, ticks the boxes in the moral and the ethical dilemma, and you're solving a problem, you're helping a person out, etc. I've seen rooming houses which are shoebox rooming houses where people are actually trying to milk them for what they are, right? And so when I've visited those, or where there is not enough space, right? And so they had a 4-bedroom, 2-bathroom that they converted into a 6-bedroom, 2 shared bathroom, co-living space, right? And so there are 6 people sharing 2 bathrooms. Imagine the wear and tear that those 2 bathrooms would have, especially if there are 6 students living there, right? And so, people who are living in these places, of course, they would respond to them in a similar fashion. And so, you would see lower rental, you would see higher vacancy rates, you would see lower caliber of tenants, you would see more complaints. And so it's important to understand that, the quality of the tenant and the management of the rooming house is the key focus. And so if you don't design it well, if you don't have a right mindset in, attracting a good clientele, then you would end up with someone, who is more of a headache than, blessing, right? From an investor perspective.
Yeah. What do you say? We want to talk about the risk and the cons of investing in rooming houses. And you and I have been talking about it, and we think it's the best thing since sliced bread. Sliced bread. What are some of the reasons you would not invest in rooming houses?
Look, of course, there is still not a mainstream market for rooming houses. It is still, although this product is almost 70, 80 years old, this is not a new product, by the way. People have been building rooming houses for yonks and yonks, right? It's still not a mainstream product. And so the lenders are still getting used to it. And so if, God forbid, you have to sell it, or if you have to take an exit out of this, they are not liquid assets as a normal rooming house. And so you need to consider your own personal circumstances when you're building some of these things. Okay, that's I think one of the biggest risks, one of the key risks. The second biggest risk is that for people who don't understand the financial structures and the finance side of things, if they try to build a 9-bedroom, 9-bathroom without attending to some of the intricacies and some of the risks in building these and getting them approved, etc., you can expose yourself to significant amount of risks where you have a land that you cannot build anything on, for example, because you haven't done the due diligence, for example. Or, you have to cough up almost, 40, 50, 60% of the cash. If you're, say, building it for $1 million, you might have to come up with 500,000 in some scenarios because you haven't presented the structure properly to the banks. Okay? So you need to understand that, while there is a way to get them at 20% or 80% lend, majority of the times you would hear people talk about, you need, this can only be lend at 60% LVR or 50% LVR. And that's why majority of the people stay away from 9-bedroom, 9-bathroom and, are more focused on, say, 6-bedroom, 6-bathroom or a 5-bedroom, 5-bathroom, because it's much more of a traditional looking house that the banks can value it at. So yeah, those are the 2 key risks. Of course, some of the risks that we've talked about are in relation to attracting the right quality of tenants, right? And so, don't cut corners, put the right inclusions in. If you're furnishing it, make sure that you're putting in good furnitures in there to attract the right quality of tenants, rather than just thinking from a bottom line perspective. I know that I always say, think about the bottom line, think about the numbers. Who cares who lives? I don't care about the investment property. I think this is one of those where you can expose yourself to significant risk. You can expose yourself to a lot of headaches with a tenant that does not want to leave and is not paying your rental. It would be a hard one to crack and, kick out, from some of these rooming houses. And so, yeah, don't cut corners. While you're making a lot of money and a lot of dough, you need to ensure that you're not cutting corners on, the best rooming house operator, the build side, the designing, etc., all of those things.
The regulatory and the licensing side of things. So that's a really important part of that.
Definitely.
It's not around just building something with 6 bedrooms, 6 baths. There are regulations. Yes. There are regulations around, and so you make sure that you talk to someone who understands that, and that you're you're also ticking the boxes in terms of the licensing and the operator side of things as well.
Definitely. What other risks do you see, Cheryl, in relation to rooming houses?
I think we've covered most of it in that regard. I think the operation side of things is probably one of the big ones. Working with someone, if you haven't done rooming houses before, is to work with someone who has that experience and knows
Definitely.
the planning side of things. What the council is going to be happy with, what the council isn't going to be happy with.
Yes.
What happened in terms of the licensing and operation. I'd say they're not so much risk, but the considerations more than anything else.
Yes.
And sitting down with someone and working out what are the ways to finance it, because it is not a low cost investment. It's not that you're buying a $300,000 property. It is, if they're purpose built, you are talking about an average about $1 million across Australia nationally, whether it's user work to purpose built. So there is quite a bit of cash that goes into it. However, the return on investment on the cash is significantly higher than it will see for a property, which is your stock standard.
Definitely. And again, I think caveating it out, a lot of what we have talked about today is based on Victorian rooming houses. This is, there might be different rules applied to Adelaide. There might be different rules that apply to Perth in Western Australia. There might be different rules that applies to New South Wales. Heck, even in Victoria, different councils have, different variations that apply in relation to the rooming house code. Although the res code is predominantly similar, the interpretation of those requirements are quite different, from council to council as well. So it's important. Definitely, it's a very important point that you're making right there.
So I still think, between you and I know we're big fans of this as a strategy to create six-figure income. I'd love the audience here to share your journey, share your experience in the rooming house space. Or if you haven't heard about rooming houses, what questions you have so that we can answer them as well, or reach out to us and we know some people that are doing this. We know Moss is already developing. I've got rooming houses as well, so it is one of the strategies. So we'll also be you mentioned a few other strategies before. What are the other strategies that we're going to be talking about as well in subsequent episodes, Moss?
Yes, and so there are 3 more strategies. So we have talked up to strategy number 3 that we would, come back and talk about strategy 1 and strategy 2. But strategy 4 going forward are builder JVs that no one talks about. I'm doing a few builder JVs, and so we would definitely go into a bit more detail as to what builder JVs entails, how do you manage the risk, and what sort of returns can you make on builder JVs, and why would a builder do a JV with a normal investor? Builder JVs or rental JVs as well. I think a lot of people don't know about rental JVs, and so we'll talk a bit about both of them as to what these interesting strategies are and how do you go about doing some of these things. The 5th one is, of course, the JVs that the developers do amongst them, or you call it the sophisticated investing, and how do you go and become part of the equity partnerships of doing developments rather than doing it yourself, being on the fence line but still earning some of these 6-figure money in becoming part of the developments without taking bigger risks. And we'll talk about some of those as well. And last but not the least, which everyone talks about, is doing it through buy and hold strategies. Of course, how do you ensure that you can generate that 6-figure returns through buy and hold strategies as well. Of course, anything else, Cheryl, that you can think of that we should slide in for our listeners that we could definitely talk of, or is there a particular subject that you want to really, really talk about as the next episode so that we can give?
I think it's important that we hold a little bit back, a little bit of mystery in terms of our next few episodes, because there'd be plenty for us to go through. If there's anything where people are keen to find out, again, reach out to us. Sharon has put some comments in the podcast, and we will definitely look at how we can integrate them into our new episodes as well. But in the meantime,
Perfect.
These are some really, really good episodes. They're going to be coming up and definitely a must listen.
Thank you very much. Thank you for listening to us. This is Cheryl and Moss checking out. Keep smiling, stay safe, take care, keep investing. Adios.
Ciao, everyone. Bye.